Test. Start recording. Well, JC, I'll probably have to get back to your question about how to, yeah, how to scan for that. Does she want to use the computer? She can use the computer if she wants. There's a computer over there. And get some water as well.
Oh, okay.
Yeah.
She has a pencil.
Okay. Yeah, you can like watch YouTube or whatever you want. Feel free. Hey, welcome back, man. What was your name again? Nick? Welcome back, man. Just kind of getting started here, just some small conversations. Nothing much. How you guys doing? Anything interesting that you guys want to share? Or?
Are these videos recorded? Where to go to watch those?
They're recorded, but I haven't uploaded it yet.
Okay.
So it's kind of like, hey, welcome.
Hello.
You here?
The meetup?
Yep, this is the meetup. Nice to meet you. What's your name?
David.
David? Okay, nice to meet you, man.
Nice to meet you.
New to stocks or veteran?
Veteran, but I didn't make my money in stocks.
Okay. So just a little announcement. Maybe I'll wait for more people to come in, but
Sure.
next week's our mixer that I host. Let me see who's online right now. I'll share my screen as well. Yeah. So we're trying to do this mixer once a month, and so the last one was a month ago. Well, 3 weeks ago. So next week, this is what it looks like. Where is it? Where's my thing? Right here. Next week, Saturday, 3 p.m. to 5 p.m., we're going to do the same mixer. This is what it looks like. We're going to put out some food again, and then just invite people to come out and just chit-chat. Last time we had a bunch of CEOs and business owners, investors. They kind of all just came in. And so yeah, we're going to do this again. I mean, we do it for once a month, so I guess you could say I'm kind of hosting it, but there is a co-host who's Dr. Yang. But we're just really doing this for me, it's just to build up my network, right? Meet more people, and that's really how you find business. I noticed that a lot of people they go get a job and then they start investing in real estate and look to like passive income, but nobody really looks at the average person. No one really looks at stocks or like businesses. So as someone like me, I'm really interested in businesses. So I look at stocks and all that, and I know that having a network is very critical. Because if you think about it, at the end of the day, right? Like there's a business on one side, which is like the product or service that you're providing, and then let's say on the left side is your audience. So there's like first time, second time entrepreneurs. They say, so you guys sort of the chicken before the chicken or the egg, right? So this example was kind of like the business or the audience, which one comes first? So the first time entrepreneur, they always focus on the business first, and then the audience. So they focus on the product or service, and then they might not go big because they don't have the audience. The second time entrepreneur, they start focusing on the audience. So that's kind of like where I'm at right now. Audience is very key for a business that you're trying to run.
But don't you think that majority of your audience will be in San Francisco Money Show next Saturday?
That's a good point. Well, so this audience is pretty general. It's just like anyone that's anyone. It's mostly like engineers, investors, business owners and such. But yeah, you're right. They could be in the money show. Are you going to the money show?
Yes.
Okay, yeah.
Well, I think so.
You think so?
It's pretty much useless like everything else,
Mm-hmm.
but it can kind of get you thinking about getting some ideas.
Okay, cool. So I mean, anything specific you're trying to achieve, like out of investing, or you're just
trying
trying?
to depend on my paycheck. That's pretty much everyone here wants to achieve, right?
Yeah, just a little bit more money, right?
Yeah, but my paycheck is much more reliable,
Mm-hmm.
much higher.
Yeah,
source
so
of income than
so in this club, it's evolved. Like doing all these sessions, I'm big on cash flow now. I think having great cash flow is, especially multiple streams of cash flow, is very important. And so I'm big on businesses. And then just if you analyze all the asset classes that are out there, there's not that many. Well, there are a lot of choices, but a lot of them are like either passive asset classes or active asset classes. So active would be like a business, passive would be like commercial real estate or residential real estate. Now, real estate's really cool. I like it too. But what I see the issue with that is high barriers to entries in terms of capital. So high capital requirements. For you to play that game, you need a lot of money. So it's typical for you to go leverage a loan, like a hard money loan to flip a home or some sophisticated like financing. But for businesses, I see that it's very cheap, it's very light, and a lot of people don't know how to approach that. But it looks a lot more lucrative, in my opinion. So are you experienced in terms of business or more of the work model and like real estate?
I had 3 startups, and none of them became really successful in early 2000s.
Okay. You said none of them?
None.
Would you say the reason is it the product or service, or would you say it's like the go-to-market strategy in your audience?
Go to market.
Go-to-market, so audience, right? So you didn't really have an audience to, if you think about it in terms of finance, the audience is really the people that are providing the liquidity.
Well,
Right.
it's kind of a subject for another startup. What I learned from my startup failure.
Yeah. So yeah, it's different. You're right. Well, anyways, that's the announcement that I have. Next week's the mixer. Today, guys, we're gonna kind of focus. Today's the basic series that I have. Today's gonna be focused on semiconductors. But I do like to give you guys a little overview of what's going on around the world. So we'll discuss that in a few minutes. I'll give you like 4 minutes. But okay, you're welcome. Any questions in the meantime? Like, I know it's like your guys' first time. You guys have any curiosity? It's kind of weird for me to do an introduction every time we have a new person, but any questions about this club that I kind of run?
So for example, this is already 34. I wonder that for the previous 33, do we have a recording or document?
Oh, this is number 84, not 34. But yeah, there are recordings, and it's all private. I could show you real quick. So I'm thinking about how to kind of release this. I haven't decided yet. There's like 20 videos that's all like 2 hours each. I'll think about it. I'll have to update you on that. So these are like all the videos right here. There's more. It's in my hard drive, but we kind of went all the way back. So I'll give you some examples. Like one session we talked about Chinese stocks. We had a venture capital report that came out by 500 startups. If you're familiar with the VC ecosystem, 500 startups. Or we also like to review like KPCB's report, the internet report. That one was really popular. But this is the sample of the recordings, in my opinion. So I'll release this sometime down the road. He added me. For now, it's just come to each session. We do have a webinar, and that's pretty much it. Little introduction is basically this is a investment club or a trading club. I've been doing this for about over a year and a half already. Yeah.
Which one? Investing or trading? It's very different games. So different.
Very, very different.
Like real estate and farming.
Yeah. So I'd say both, because we could jump into financials and look at the growing earnings, right? The growing top line or bottom line, and dig deep into like margins and all that. At the same time, we do look at short-term strategies like intraday trading or swing trading and all that. So it's both. It depends on what the crowd wants. But I mean, sometimes I get into a position and it turns out to be like a trade. But sometimes I might be playing like AT&T. Well, recently I'm playing AT&T for a longer hold just because I like their 6% dividend. So to me, it's kind of like, it's hard to tell you which one's which. But, what I learned from teaching is that everyone's different. They have a different time frame, different risk tolerance, different profile. So you just kind of have to find your flow. But what I try to provide in here is solid, robust analysis for fundamental investing or even trading. So we'll look at patterns, like we'll stack it. We'll take a position that's like a hybrid of the two. So that's really what I try to do. I don't know if you guys have any comments. Like JC, is that like, would you say this is more like a trading or investing, or like it's pretty diverse, right?
It kind of moves back and forth, because if you're going to be like investing, you're looking at weekly and monthly charts mostly, right? If you're going to be like trading, where it's more short term, you're going to be looking at daily and maybe hourly charts, that kind of stuff. And I know Kay likes to look at daily charts, so it's more like 1 to 2 weeks time frame. But if you want to look at more investing long term, you guys are looking at monthly charts.
Yeah, so let me give you guys an example. So since this is the basic series, I'll try to explain more and more of it. So if you ask me like, oh, are you trading or are you investing? Well, for example, look, we're looking at stock charts right here, and we're using like moving averages to kind of time a position or a trade, right? So that's very technical analysis, that's very trading. But if you jump to the monthly and start looking at charts, you could apply this to investing as well. And then to get even crazier with the fundamentals, over here I have Guru Focus, and then I could look back 30 years of financial data. So at this point, this is 30 years of financial data that we're looking at for Apple, right? Most places only show you like the current snapshot. If you go to Yahoo Finance, but I pay for this, so that's why I get 30 years back. So it's hard to say like, are we pure trading? No, we're looking at financials as well. We look at, you know, income statements, balance sheets, cash flow statements, and then all the ratios and stuff, just to kind of get a gut feel of like what's the economics of the markets right now. We even take it a little, you know, a step above and look at the market multiple. So I'll show you right here. As you can see already, I do have like a bunch of like NVIDIA earnings reports out because they recently released. Yeah.
Can you talk a little bit more about this? Dropped 5%, right?
Yeah. So today I'm going to talk about NVIDIA's earnings and kind of how I see like why it dropped and, you know, the reason for that. I mean that whole segment, the semiconductor segment of the market, has been in like a not downtrend, but a lot of headwind, a lot of volatility in that segment. So for example, this right here, this is now we're taking a step back. We're looking at the entire S&P 500, and we're seeing that on average all the stocks are trading about a 25 multiple. So now this is like fundamental. This is like investing right here. So if the company is trading at a 25 multiple, that means, let's say you're a stock, you earn 100K. You're selling at 25 times that 100K. Right? If I want to buy you out as a stock and you make 100K, I'll buy 25 times what you're worth. So the entire market multiple, the S&P 500 or the 500 biggest companies, are currently averaging at 25 right now. If you look at 2008, it's like all the way up here at like an 80 multiple. So multiples are very important when it comes to fundamentals or, you know, valuations or buying out a company. So that's why it's kind of hard to define like, are you an investor or a trader? You know what, I honestly, at the end of the day, I just provide analysis that could lead to either a trade or investment.
Can you please
But you
explain
choose.
again? I didn't
The multiple?
Yeah.
Yeah, so I mean, let's say right now your income is 100K, and in your, we'll ignore how much you have in net worth. Let's say your income's 100K and you're worth $1 million, but we'll ignore that 1 million for now. So right now you're selling for 25 times 100K, right? So that means your multiple is 25 of your earnings, what you earn in income. Does that kind of make sense? So okay, let me add more context to it. Like when you look at many companies out there, there's like thousands of companies. Some companies will be trading at like a 10 multiple, and some companies will be trading at a 25 multiple. So if you know the market average is about 25, you know the 25 is right at the market. Anything that's below 25 is kind of below market in terms of earnings multiple, right? But that's just earnings multiple. There's also the net worth or the balance sheet multiple. So that's another important multiple as well. This gets deep into, you know, valuations, and at that point it's kind of like Warren Buffett level type of analysis. You had a question?
So if like right now we see that, oh, it's at 25 multiple, but I see that a little while ago it was lower, does that mean that if it's a lower multiple, it's a good time to buy, and if it's a higher multiple, it's bad?
It doesn't, I wouldn't say this should be the primary indicator of time to buy. It's just giving you a gauge of what everyone's willing to transact at. So to give you an example is, there's like this social phenomenon, right? You're willing to buy a cup of coffee right now. Let's say it costs $1 to make, right? And you're willing to pay $5 for it. So that's a 5 multiple, right? Now, for some reason, people start paying $10 for a cup of coffee. Everyone's agreeing to pay a 10 multiple for that cup of coffee. Are you going to pay that? I mean, you might at that time, because everyone's willing to pay that. So this is like a nice gauge of like the macro picture, that if the multiple starts going down, you're seeing that people are willing to pay less and less for that stock. So it gives you a great like gauge on like overall valuation of the market. Is the market overvalued, right? But that's just one gauge. That's just the earnings gauge, the salary or the income gauge. The other gauge would be the price to book value, right? So we know that the market average PB, price to book multiple, is about 3.4. So let's say your net worth is 1 million. Everyone's willing to buy out companies or trade companies at a 3.4 million multiple, or 3.4 million, which is 3.4 multiple.
So I'm not sure I get price to book exactly. Like I get that point, the coffee one, like okay, everyone's just like willing to pay at that. But what is price to book? Like what's the
Yeah, so this is where you have to understand fundamental analysis. So guys, this is the harder topic, I'd say, for a lot of people, because most people, when they get into investing and trading, they look at the charts first, and then they start looking at the financials. But you know, who knows? So you have to understand that there are 3 major financial statements, but I'm just going to talk about 2 for this purpose. There's the income statement and the balance sheet, right? Every company that you want to analyze out there, Nvidia, Apple, Google, whatever, even yourself, you have an income and you have a net worth, or you have a balance sheet, whatever's in your bank, that's your balance, right? Minus your liabilities. So every company looks like this. And so you're saying you don't understand the price to book? Is that what you asked? Yeah, so over here, I know it's like, you're like IS, BS, let's keep it simple. This is your salary, right? And over here, this is your net worth. Meaning, let's say you owe 20K on a car, but in your bank you have 100K, your net worth is 80K, right? So over here, the market multiple is about 4x. So all stocks are trading at a net worth of 4 times their net worth. A multiple of 4 times their net worth. And then over here is the income statement, which is about, was it 24? Everyone's willing to trade at 24 times their earnings. So if your salary is 100K and your net worth is 4x, so it's 2 different sets of multiples that we're looking at. And so I'm just gauging this at a big macro level to see what people are willing to kind of play at. It's when these multiples starts declining is when we're like, oh, these people are not willing to bet that big anymore. So that's very dependent on looking at the S&P 500. The last basic session that we had, we talked heavily about the S&P 500. So these are the, in the beginning, those are the financial statements, right? The other one's the cash flow statement. This one's a little bit more advanced, but I'd say it's not too necessary to kind of discuss about. So again, this is the multiple of your salary, the multiple of your balance sheet. This one just gives you a view of like, where's the cash going? Is it the money going to operations, investing, or is it leveraging? A little bit more technical, but we won't talk about that today for the basic series. But keep in mind, those are the 3 major financial statements. To give you an example, right, we could pull up NVIDIA. So this is NVIDIA's page. Every public company has an investor relations page where they disclose everything that is numbers related in terms of cash flow or operations and such on the company. So you could go in here just by Googling NVIDIA investor relations. So we'll go in here and look at the quarterly results, right? And then whenever you see me open up a 10Q, let's see, they're Form 10Q, which is every quarter companies have to report. So I just open up right here. So in a time span of 1 year, right? Let's say this is 1 year. You know that corporations are very quantitative and they operate in like a very systematic way. So they'll do quarterly reports. So 10Q. They're called 10Qs, the technical word. So they'll do it Q1, Q2, Q3, Q4, 4 times a year. So right now, 2018, NVIDIA recently released their Q2 for year 2019, but it's really 2018. So going down, see, this is where it's probably too basic today to kind of, jump into the super details. I think the gentleman's looking for water. Maybe I might want to help him out. I hope he's okay. I mean, he got water right here. Sorry, guys. Sorry for the pause, but this is the statement, right? I mean, you could perform this analysis too, but for a beginner, I probably recommend. I mean, you could jump in here for fun, but I probably recommend using like Yahoo Finance or something in the beginning, just to kind of get a feel of this, right? If you go over here to Market Watch, we have right now. This is a Chinese stock, but I'm just showing you the fundamentals, right? The income statement, the balance sheet, and the cash flow statement. Those are the 3 statements out there. That's all you need. But they'll provide it in here as well, objectively, in the NVIDIA 10Q. So Just scrolling down real quick, the 10Q on NVIDIA, you'll see right here. This is the income statement. So, like, looking at the structure of this already, you could tell, like, it's not friendly on the eyes at all, right? It's something that you, for a basic person or, you know, beginning, you really have to train your eyes to look at. And that's why I say, you know what, in the beginning, for your training, for the sake of training or beginner status, look at somewhere here. It's a lot more basic. Income statement, balance sheet, cash flow statement. A lot easier on the eyes, I hope. But any questions on the statements here? Nothing? Okay. So I hope that little introduction will help you today when we kind of talk about semiconductors, stocks like NVIDIA, Intel, and such. That market segment has not been performing as of late. But before we begin, let me see who's online real quick. People okay? Yeah, before we begin, I already mentioned that next Saturday will be our Mixer event. One more announcement, but maybe I'll announce that next week. Yeah, I'll do that next time. What's going on in the markets right now? Right now, Chinese stocks are getting hit the hardest. I mean, I like Chinese stocks, but they're getting hit really hard. They're in the bear market. They're dropping like crazy. I mean, this chart's in green, but let me show you another chart of the Shanghai index. So I like to track this Shanghai index just as much as I like to track the S&P 500 index. The S&P 500 index is the index of like the USA markets. So now when I look at the Shanghai index, I'm looking at the Chinese market because I'm looking at some great Chinese stocks. Some of them are like Tencent, Alibaba. This is not a recommendation to buy, but these are like major stocks, like, you know, Alibaba's. I mean, it's like 400 billion in market cap, half the size of Apple, and Apple's the biggest company in the world. So that's why I look at Chinese stocks. But anyway, showing you guys the Asher ETF. This is what's been happening since the beginning of 2018. So they're in a complete bear market right now. Doesn't look good, right? So really scary. If we pull up all the Chinese stocks as of late, go to Asia. Well, yeah, we could just do Asia, and then we'll size it by the biggest company going down, and then we'll go to performance. We could see that for like the past quarter, a lot of them have been down like double-digit percentages. Look at that, 11. This one's up 4. This one's down 10. Down almost double-digit. Up 1. Down 10%. Down 11%. And keep in mind, these are the top titans of China, right? Alibaba is 440 billion in market value. So,
I just have one question.
Yeah.
So I know Baba is also listed in the US.
yeah.
So how do they go about calculating the market cap across multiple exchanges?
That's a good question. I mean, they would just consolidate okay, so it's what people are willing to trade it at. This is ADR, by the way.
I have answer.
Yeah.
It's actually very simple.
Okay.
So as he said, in America, ADR is what traded, so it's depository receipt. And actually you calculate market valuation by just multiplying number of stocks at the market and price of one stock.
Yeah.
That's it, very simple.
Right. So then they just add it up across all the exchanges?
No, it just here's price of Alibaba here in America is this. Price of Alibaba.
Then how is their valuation like 400 billion here as well as 400 billion in China?
It's just here. It's just here. I mean, so let's say if you live in China, you would look at a perspective of like, oh, it's this. Our Chinese company is trading on American exchange, and that American exchange is valuing it at 400 billion.
Yeah.
But we're looking at from our end over here in China.
They usually, I think they did IPO here in America.
Yes.
And in China they have probably tracking stock.
Oh, okay.
Different thing.
Okay. So, okay, got it.
So to answer your other question, like you're thinking like, oh, if they, a Chinese stock, this is like a Chinese on an American exchange stock,
Right.
like a Chinese and China stock, it'd be traded in their currency.
Exactly. That makes sense.
Yeah.
Okay.
But now the question is like, why did Alibaba get issued in the U.S. markets? Maybe they want to tap into our big investor base,
Exactly.
right? Because if you think about like what I just explained to you about fundamental analysis, income statement, balance sheets, around the regions of the world, from America to like Latin America to EMEA, which is Europe and Middle East, and then APAC, Asia Pacific. Which, I mean, if you think about it, who really has like some big balance sheets? Like US got some big balance sheets, or any developed economies. So to them, it's like incentive for their stock price to go up to kind of issue it here so that the American buyers would consider it at least. I mean, let's say you're like let's say ultra high net worth. Let's say you got like 10 million in net worth, and you know, there's a 10-cent IPO. Well, okay, that's a real example. You're an ultra high net worth investor, and you like the convenience of investing in Asian stocks, but a giant company just IPO in Asia, like, well, SoftBank's a real example. Just say a big Chinese company, you want to invest, but you're kind of like, oh, it's not an American exchange, so you don't buy those shares, sort of. So because you're lazy, you're being lazy.
Yeah.
Yeah. So that's the example of why we have ADRs.
Okay.
I mean, if you look around the world, right? Let's see, America, APAC, EMEA. These are technical terms that describes the region. You guys would know if you kind of work in like corporate, or it's just if you read enough earnings reports, everyone talks the same lingo. It's like the language, right? So this is what I mean by the lingo over here. So I'm gonna pull that away. So the lingo is really North America, Latin America, EMEA, and then APAC. So this world is divided into that, sort of division. It helps to know this stuff if you're a startup that's a middle market startup that's selling internationally, because you're like, okay, because when I analyze a lot of like quarterly or annual reports and all that, they'll be like, okay, we made this much money from North America, we made this much money from EMEA, and this much money from APAC. So I want to see the quality of the cash flow from each region. So this is where you kind of have to develop your understanding of the world, right? So that's why I like this gig, because this is my portal to learning about the world, essentially, right? The different types of businesses that have great efficiencies and the businesses I never want to touch. I think last week we had an example where we said Chipotle Mexican Grill makes 30 cents on every burrito, right? Yeah, they make 30 cents on every burrito. So that's why I said I would never probably want to, maybe I'll own a restaurant, but I would never want to scale it to Chipotle's level, right? How do I know that? Because I could just jump down to like, their most recent profit margin. So they make 3% on, this is a aggregate consolidated view. So we put everything together, and so they're making 3% on every every unit that they're kind of dealing. So I don't know, man. I probably wouldn't want to own something like that, but it is, I'd say it's a staple. You could say it's secure. But other else than that,
That
yeah.
doesn't seem like genuine to me.
They don't seem genuine.
I mean that only 30 cents per burrito. It doesn't seem. I mean, it must be $1. I don't know.
Well, I mean, the number says it. That's
Yeah.
why, right?
I don't know.
And now we could get a little bit more technical and look at Chipotle from this angle and see how their margins evolved over time, right? Over the past 30 years. We could go. Let's see, 30 years right here. Let's see, 30 years, and we'll look at their margins. Their net margins, so net margin percentage right here. So it's kind of sad. It looks like at one point they were making 10% a burrito, so $1 at one point, because expenses went up. So these conditions always changes, and this is why I know I'm kind of showing you guys the super technical stuff, but the key thing to really look at here is we're just paying attention to this. I'll make it simple. We're just looking at this, and that's what I'm looking at. I see that their net margins are going up over time. The cutoff is right here, but that doesn't seem right. Why is it going up? Oh, and then it went down right there. That last part went down. So these two right here. So meaning if it went down, they're normally a 10% business, meaning they make $1 on every burrito. But the last 2 years of 2017 and 2018, they incurred like some huge expense. Could be a lawsuit. Could be like the whole what's it yeah. But yeah, food poisoning. So you kind of see like these events cause damage to your business margins and all that.
Or it could also be like some form, maybe not specific to Chipotle, but for another business, could be some form of reinvesting.
Yeah. So as you can see with what we kind of discussed so far about fundamentals in business, like what's your take on it? Like, could I use this for trading? Yeah. Could I use this for investing? Yeah. So are we like a trading or investing club? It's really hard to answer, man. It's a tough question. But I just demonstrated, how much money a corporation makes. And so just analyzing all these business out there, I could truly tell what's a beautiful business, which is, always in terms of numbers, and what to me is like a business I would probably never touch. but it's so foundational to the world, right? Like industrials is a segment I would probably never touch. Industrials and basic materials, meaning like people who deal with like coal or commodities and such like that. It's essential because like, how did you get here today? Your gasoline helped you, right? Physically get here. Those are very infrastructure type of businesses that are safe, but their margins are just so poor that, I mean, at that scale it's lucrative because they're dealing in like 200 billion in sales versus like Facebook or something. They're like lower in sales, but they capture more of their earnings, which is nice. So that's really the essence of like businesses. Did that sound too complex? Are you guys okay?
It's fine.
It's fine? Okay. Just trying to gauge the level of the crowd and what you guys find interesting. So anyways, just pointing out right now, the corners of the world, APAC is getting hurt. I'm seeing a lot of decline in Shanghai index and just Chinese stocks. I mean, if it's declining a lot, right? It's kind of like 2008 again. If you picked up shares in 2008, if you bought a home in 2009 till now, you'd be pretty golden. So that's kind of like the opportunity that's setting up in Asia right now. So I'm not saying go out and buy Chinese stocks right now, but it's setting up to rebound sometime down the road. Are we saying that emerging markets or China's never going to rebound? Yeah, that's not true. It's going to rebound because it's ignorant to say that the next generation of kids that come into this world, they're going to be hungry and they're going to get into that entrepreneurial phase or that enterprise phase of their life to build a wealth, right? Because it goes from enterprise phase and then you kind of top out and then distribution phase, which is retirement age. So to me is that the stock market game is never going to end. It's something that's just going to keep going as long as the world keeps going. As long as greed and fear, all that keeps existing, it's going to keep going. So how you capitalize in between is up to you. Basically, I'm asking, saying that how you decide to be an investor or trader in between, it's up to you. You ever see those fitness ads where it's like you're born into this world weak because you're a baby, and then you die and you die weak because you're old? But how you decide to be fit in between is up to you. And then they have like some buff guy. It's very, I guess like you could apply that same concept to money here. You're born into the world with a low net worth. You end probably with a distributed net worth. I don't know. But how you decide to be in between is up to you. Kind of interesting. So Shanghai index, guys, this is what I'm seeing. It's clearly breaking down. You guys want a little bit more of a technical view of what's going on in Shanghai. I don't know if you guys talk to people or have friends in Asia right now. You should ask them how they, what's going on with the stock market. I bet you it's in their news every day. It's something that they're talking about every day because it looks like 2008. So
my classmate operated 50 billion. He's a fund manager for 50 billion in China market. He's top 20 trader, right? I asked him, he won't tell me. He said he's changing his idea every day. He can't guarantee that.
Guarantee the let me get this right. Your friend manages 50 billion. Classmate.
My college classmate now is the fund manager for 50 billion yuan.
Okay.
Top 20 traders in China. Something. He won't share anything. I mean, his idea with me.
You sure he's a friend?
No, he said that because of friend, he will protect me or something. Like
Oh.
that. Because he said he's changing his mind daily.
Yeah, I
Because
mean.
when go in, he everything off, no cell phone, nothing, and trader,
Yeah. So I mean, he probably just. I mean, if he's managing that much, he also has a fiduciary duty, so he can't really like talk about. I mean, I'm assuming they play on the same rules that the U.S. plays. Like over here, if you manage funds, I can't be trading your funds for myself if I'm managing your funds. So that's I know that because I used to work in the finance industry, and I left because of that. But maybe he's just not confident in the market right now, right? So if we analyze this market real quick, this is the Shanghai index. And I'll try to keep it simple for you guys. Let's pull this out. This is the Shanghai index on the daily chart. So this is the beginning of the year, right there. The end of 2017, beginning of 2018 right here. It rallied and then it just broke down. It just kept breaking and then it set up a bear flag right here. You see how I see these patterns, but for a beginner, you don't see these patterns, right? But if you look at it long enough, you'll see like, oh, that's a descending triangle, and then this one's like a bear flag, and then further downside, stuff like that. You start seeing the breakdown, like the breakdown's right here, but you don't see that if I didn't point it out. So That's something you have to train, right? If you didn't see it, it'll look just like this. Like, what am I looking at? So with the trained eye, or over time, you start to see it and you get a great understanding of where the direction is going. I personally love it because it teaches, like, why do I look at Asia? We're all the way over here in the USA, right? Why do I look at Asia? Well, you know, if you're aware of the bigger picture right now in the US, think of our demographics, right? We're in the USA, and it's definitely a rich population, right? But they're over leveraged, meaning they have too much debt, right? And we're also topping out in terms of like asset prices. All asset prices here are kind of overstretched because of, like, you know, central banking, printing money, inflation, all that. So knowing that the U.S. has primarily an aging population that's all, you know, primarily over leveraged, and also so when I say aging, they're about to get into distribution mode, meaning they're going to sell their properties, or, you know, sell their biggest asset, which is real estate. Assuming they bought in, like, I don't know, 2000 hell till now, those are pretty big gains. Then there's a deflation, you know, environment coming soon, or, you know, asset prices might decline because they want to get out of position to retire. I know because last week, you know, I've been doing the open house for this elderly couple, and they've been wanting to sell, but the market slowed down in, like, February for the stock market, and then March, the real estate market started slowing down. They've been wanting to get out for the longest time. They finally got out, but the home was on the market for like 60 days. And if you guys know real estate, I mean, like, previously, it's been like 20 days from what I'm hearing, you know, with the agents, but this was on the market for 60 days, so they started feeling it. But they finally got out, they liquidated, they're taking their money now, and they're going to, like, a cheaper place, buying a new home. They're buying a new home in, like, Reno. So that's an example of a distribution phase, right? So for us young millennials, it's like, well, you know, up and coming 30s or 25s and growing, we're looking to get into position at one point, whatever $1 million home for 30 years. I don't know. To me, it just doesn't make sense. So I'll forget about the appreciation. At some point, you know, I mean, let's see. Let's look at one of the charts that I posted in the chat. This chart, we're going a little into the, let's see, the baby boomers and such, because these are big markets right now that are occurring that you kind of have to know about. This is for you guys who don't know. This is a chat that we have in the group. This is like the 24 original members that used to come here all the time, but ever since I went digital, they're all online now. I thought I recently posted the. You saw it, right, JC?
Yeah.
The baby boomer stuff. Where is it? I can, but I didn't write anything specific. I just put images. So I'm sorry, guys. Actually, I have it on my desktop, which is kind of messy too. So I'll show you some of the pictures that I saw, and these are like official numbers too. Sorry for the messy desktop, but here's one. Let's see. This one says U.S. baby boomers reaching retirement age in the millions, right? So this chart's telling me that every year, we're in 2018 right now, right? Next year, even more baby boomers need to retire. Next year, even more. 2021, even more. And it's going to peak out and kind of consolidate from 2023 to 2027. So there's this momentum of people who need to liquidate assets. Meaning, if you're a baby boomer, you got a home, you want to start selling to take your gains and start, you know, retiring. You got stocks, you want to start selling. So we're going to see a lot of, you know, headwind in the U.S. stock market. So now this going back to why I'm looking at China or looking at Asia. If we look on the other side of the world, in India, right? I said that over here in the U.S. we have an aging American population who's over leveraged. That means they can't really borrow anymore. On the flip side, we have a young audience or a young population in India who is not leveraged. So that means they could borrow money, buy a home, to credit, you know, get credit cards and all that. So they could pump up asset prices. So macroeconomics wise, India's, you know, to me looks like an opportunity. The only issue right now is the dollar. So when the dollar rallies, all the emerging market stocks like EEM, your position that you're in, it goes down. Let's see. So Santo, he just said, hey Kay, as baby boomers reach retirement, are they going to be rotating more into dividend stocks? And is that a long-term bullish trend for dividend stocks and REITs? So Santo, my answer to that is, so like, you know, what the hedge funds or the money managers are kind of talking about, they're saying that right now every asset classes are inflated. So you try to run the bonds or stocks, real estate, and we even look at commercial real estate. Cap rates are 4 or 5%. Everything's inflated. So you're saying, will they be rotating to dividend stocks? I think maybe. I don't think they'll be rotating the bonds. I think they'll be rotating to more stocks because, like at this point, everything's inflated. So stocks act like fixed income. At least certain stocks, like dividend stocks. So I think maybe. I think that could be an open window of opportunity. But going back to the macroeconomics, so we're seeing the Indian economy the demographics are very healthy, which is economic fundamentals or economy fundamentals. So if I know that there are a lot of the profile of the Indian population are young, they could borrow money. They're gonna spend money on homes, on credit cards, or stocks. Wouldn't that mean their stock prices would go up? I think so. I think they have there's more upside there than here. Over here in the U.S., it's questionable right now. But I'm just going to keep playing the direction that's going. Right now, it looks like the S&P 500 wants to go even higher. So it's kind of scary, but what are you going to do? Like, where are you going to find upside? I mean, I know where there are some upside, but they're like very niche strategies. And when I say niche strategies, there's upside in trading, in options trading, in small businesses, in private real estate deals, private off-market deals, where someone that's distressed, they want to sell. You get that's more professional level. So it's not really for the average Joe. For the average Joe, it's scary because where are you gonna find that upside, man?
But isn't that a potential opportunity in the future? So if everyone's starting to liquidate, then prices will fall. And then
Now, who's a short seller? That's a niche strategy, right? It's the professional crowd. Because you go to any financial advisor, I know because all financial advisors, all mutual funds, majority of them, I think there's some now, but very little, they're all long.
Sure, okay.
They all go long. So what are you going to do?
No, but like, as you said, like, people are going to start liquidating, right? But in the long term,
Now, I'm not saying for sure, but the numbers right here,
numbers, yeah.
that's under the assumption these numbers are true. Because we're having increasing, baby boomers who are retiring. They're liquidating.
Absolutely. But
Yeah.
I'm saying, but if the prices start falling, right? And you don't need to be a short seller to know that. But then once it's down, it's going to rebound up at some point, as you mentioned.
Yeah.
So then if you buy then, it's an opportunity. Right?
Yeah. But in that time, I think it's going to be increased volatility, meaning it's going to be a roller coaster environment. I mean, this is a major headwind, and the way the structure looks like for baby boomers, the number of baby boomers to, I guess, millennials, it looks like this. It literally looks like that, where the population of baby boomers is right here. There's a lot more baby boomers, and this is the population of, I drew circles, but these should be like bars. So this is the population of baby boomers to let's say, millennials, right? So who's paying their Social Security? I mean, population-wise, if it was like this, like it was even, then this system is stable. But economics is saying that there's not enough population to pay these guys over here. So, like I said, we're in tough times. But things go in cycles. That's just the nature of it.
So according to this chart, the healthcare section will be better.
Yeah, I'd say. So yeah, see that now that's a great investor thinking mentality. Like you're seeing that there's increased baby boomers retiring. Well, let's go invest in REITs that focus on baby boomers, retirement homes. Yeah, see what I mean? So that's how you have to sort of think. But yes, you're right. At least I'm in agreement with you. Here's another chart. That's number 3. Let's do number 2. I think this was number 2, right? Oh, this is X. Nope. Number 3. Here we go. Number 2. Now here's the other reality. The average age is kind of increasing in terms of retirement, is it? No, it's always been 65, but they're thinking, maybe after 2018, the age to retire is going to be a little bit longer. Now this is interesting to me because I wanted to prepare like a super awesome talk today, but I ran out of time because I was spending it with family yesterday. I was sitting eating dinner with my uncle and auntie, and my uncle, he works at Marvell for I think over 10 years now. And we just started talking about retirement, and he's kind of like, well, he has 2 properties, and he has this income, but he's kind of like, oh, I gotta stretch my retirement, and he's 49, and I asked him like, how do you feel about retiring at 65? And he's kind of like, honestly, dude, I do not want to do another like 16 years, 9 to 5. He's just tired of working, and so, I mean, he's only started thinking about like retirement now, I guess, or his strategy, because my cousin, his son, just went to college, and so now he has a lot more time. So, I mean, his plan A is kind of like, yeah, we could, liquidate our properties and then buy a cheaper property and live here. His plan B is kind of like liquidate and then go somewhere else cheaper. So that's the concern here. It's heavily dependent on demographics, as you can see, right? We're right now, what we did so far in the past 15 minutes is we're assessing the economics of the older generation and where they're standing, where they need to retire, and how it causes headwind in the stock market. So I don't know. I just got to keep playing the direction. That seems to be the most profitable strategy so far. So if it's going down, get out. If it's going up, get in. My advice. The other chart, what I have right here, U.S. labor force participation rate above 65 years old. What did this one mean again? I forget. 18. Okay, we won't go over this chart because I don't recall. It was a video and I took pictures, little snips of it. But that's the current economic setup of that. Let's go back to it. Do you guys have any questions on like what we just talked about?
Well, actually,
Yeah.
when you were talking about being able to call out the different patterns, what did you do to train yourself to do that? Or, like, what was all involved in that?
Yeah. So if you study technical analysis, right? Now we talked about fundamental analysis in the beginning. Now we're moving to technical analysis. Technical analysis is the study or analysis of the chart, right? So believe it or not, doctors are using technical analysis. Now you probably are like, no, they don't. They really do. You seen it?
I mean, I can see why they
So do you go visit the doctor? Let's say you visit the doctor every month. Every month that doctor gets a data point. So let's say your cholesterol, it's like average, and then the 6th month you come in, it spikes. And he's like, what happened, man? What'd you do? Oh, I've been partying, I've been eating a lot of barbecue and eating a lot of fat. Well, you gotta control this. So they're doing technical analysis. That's basically what we're doing here. So now to answer your question, like how do you get into the pattern recognition? Time, due diligence, training, 10,000 hours of martial arts. No, okay. 10 hours, the hours of practice. So I've been teaching this. If you look at today's session is number 84. Can you imagine what was, 83 and previously? So it's practice, right? And then before the 84 sessions that I had teaching for 2 hours each every Sunday, my degree's in finance and economics. I practice it daily. I look at the charts already. So it just takes time. You gotta put in the effort. Like, if you want to be a great investor, I think you just gotta keep going at it. I mean, I wouldn't say I'm a great investor yet. But I could pick out position trades or investments that make gains. It's just the discipline. Sometimes I lose the gains, but I know that I can make money from this.
So I guess to like get more granular with it, because I'm like trying to do the same thing right now. That's the phase I'm in.
Yeah.
I got a book on Japanese candlesticks.
There you go.
And different, or if you've ever heard of Skillshare, it shows you different ways to do stuff too. Watching a video series on that. So would you say like you pull up your chart? Let's say you pull like a 5-year chart.
Yeah.
And then in that you just try to call out, let's say, a bull flag or like whatever else there is. I forget what they're called. But do you break it down by like 4-day dojis or like?
So I don't do the advanced candlesticks. I do the candle patterns. Chart patterns, not candle patterns.
Okay.
Candle patterns is like doji. Was it the soldiers and all
like
that?
Hangman.
Yeah, I don't use those. That's more. I mean, I use it once in a while. To give you an example, would be like probably a Facebook play, right? Where like right here, you got one of your dojis right here, and then you got like a little reversal. But that's like a quick trade. These days, I'm more of like swing trading, investing, and I just kind of play the momentum stocks that just keep moving in one direction. So it's very laid back and easy to do. It's the same technique that I'm applying to a simulator, As you can see, the simulator is kind of just hanging at 821,000, but I'm just holding like long-term positions. For example, the biggest gain I have right now is actually my Apple calls, where I bought Apple stock options at $13 a contract, or $1,300 a contract, and they're now selling at $3,000 a contract. So the gain is about 181,000, right? So this is my options portfolio. This is my stock portfolio, and then down here is my shorted portfolios. So make money on the downside. Sorry, I kind of digress, but going back to like, you know, I guess the granular detail of how I find the patterns is, I don't know, man, like one day it just kind of clicked, you know, like 2 years of like, okay, it was in college, like you're studying for 2 years, like, dude, I don't know what the heck is going on. And then one day you're at a cafe and you're like, oh my God, I see it.
Okay.
And then, yeah, it's that constant, like you keep striving and you're ambitious, you want to make it, you know, you want to succeed in this because you like it. But for the first 2 years, you're like, I don't see anything, man, it's not working.
Okay.
But it's that constant coming back, and you finally see it, and then you become more confident over time. You know, one reason why I like to teach is because it improves my pattern recognition, making me like, you know, understanding the financials. Like I could talk about it quicker because I'm teaching it. So you just have to indulge or surround yourself with it. You know, talk to people who are in it. Read about it, listen to it, use all of your sensories, right? The way we learn, multi-sensory learning from like hearing, touching, seeing, reading, all that. You just gotta surround yourself with it. Like with anything in this world, you look at, okay, we all have this friend, this buddy, right? Like I drew this last time, but basically, everyone has this friend. I'm pretty sure, I probably bet money on this too. We all have a friend who's kind of like, or friends who are like, I want to do this, I want to do that, but they never do it. There's a lot of people who are like, oh, I want to make money. I want to own a business one day, but no action. So to me, it's just action. Like these days, when I hear it, that's cool, man. That's cool that you want to complain. I say that in my head. But I got to go work. I got to go develop, you know. If you think all these corporations out there, right? They have to develop something. Like yeah, the guys at the top, they're kind of orchestrating everything. But at the end of the day, the engineers have to put in the day-to-day development of the application software or the semiconductors. You guys are actually developing that. Same thing with real estate, right? We could get financing, put it all together, but at the end of the day, someone has to build it. Same thing with sales development. Someone has to go build the relationships. So, you know, if you ask second-time entrepreneur, or at least in my opinion now, if you had a business that you attempted and you failed, in my opinion, is because you didn't have the audience. I mean, in the digital world at least, because I know you're building a digital business, right?
Yeah, it's really all about.
It's all about audience. Like you could probably like have like poop knowledge, right? But you sell really well, people follow you.
Well, yeah,
That's the crazy part.
Like when I first started freelancing as a developer, I went to the seminar and they like some other freelancers there. They already got into their careers. They're like, you can make an awful website and still get paid.
Yeah.
So that whole perfectionism aspect,
Yeah.
you can kind of like that. I mean, you want to do well, but like sometimes that holds you back.
Yeah. Yeah.
Like you can still be an amateur and make money.
Yeah. Yeah. So that's why, you know, if you look at the statistics on who has a bachelor's degree, now I'm not trying to be offensive or anything, but they say about, you know, the U.S. population is about 350 million. Probably grew by now to maybe 360. I didn't check, but the last time I checked, it was about 350 million people. They say about 32% have a bachelor's degree, and then like about 10-12% have an advanced degree. So if you know those numbers, then you're this is based under the assumption, right? Now keep in mind, there are people who graduate high school and pure hustlers and they succeeded, but majority of them are kind of like just, I mean, you're sort of at a disadvantage. That's bias. I don't think just because you don't have a bachelor's degree doesn't mean you're disadvantaged. If you're a hard worker, you'll make it, in my opinion. But my assumption from a marketing perspective, running a business, if I know that 70% don't have a degree, then I have a 70% market that I could sell to basic knowledge, how to open a stock market account, brokerage account. And there are guys who are getting rich off that. And to me, it's kind of ridiculous because I'm over here like, teaching like the upper end of the concepts and stuff. But there are guys who are more sharper than me, I guess, in terms of like street smarts and hustler status, that they go sell the 70%, a simple service that I could sell, but I'm not selling. It's competition, baby. But yeah, that's the reality of this world. Why do I look at 70% have a degree or not? If you truly try to start a business, you start thinking about marketing and all that. And when we talk marketing, you have to really target who's your audience. I've learned from running these meetups that the typical profile that comes in here is like 35 and up, engineer. I mean, I'm not trying to be offensive or anything, but that's the typical profile I tend to get mostly. But these days it's kind of after the Mixer event and putting pictures of the event, like we're getting all sorts of people coming in. So, but I hope that you guys come here to learn about business and share like what you know, or just learn more about investing, and it helps me too. I mean, like the more and more I look at stocks and businesses, the more I move away from the average thinking, and the more I see that all businesses are like pretty much a scam, or everything is starting to look more like a scam. It's sad to say, but that's how I feel towards about it. But maybe that's a very half empty, pessimistic view. But it's like if you look at Apple, right? I don't know their exact margins, but let's say every device they sell, right? They're taking money from people, but we don't see this because we're so sold by their marketing. So their profit margin on the most recent is 22%, right?
This is hardware company. Just think about it.
Hardware.
And retail. Half of Apple population are in retail.
Yeah.
Retail and hardware, 25%.
Yeah. So a quarter, right? So basically, every $2,000 laptop you buy, they make a quarter of that. You give them a quarter for that. We don't see it. We see the marketing. In one of my pictures that I had, I drew a picture of an iPhone 10 next to two things. I want to show you guys, but I don't know if I can find it. This is like technical discussion number 40. Okay? It's a while back, but I think because we're already in this conversation, I like it. I'm going to show you guys. So let me get a little moment. I took a picture of, let's see if I can find it in my database. Ooh, this is going to be really far back. OneDrive, technical discussions, number. It's a picture, so it should be easy. It was a session where I did on consumer versus producers. Okay, I found it right here. Let's do this. Consumer. Here we go. So this is one of the sessions I forgot what technical discussion this is, but the talks are always fun. So this is what I drew. I literally just put that out. So what on the right side is what the average person sees, or the consumer sees. They see, oh shoot, $1,000 for an iPhone 10. But on the left side, if you're a producer, you're seeing like, okay, well look, it costs like $500 to wait, is this the margin? Yeah, so this is you make $500 on the phone, but this is the cost of doing business, and then the intrinsic value or the raw cost of the material. That's what you see on the other end, because you're supplying to your market. Supply and demand, baby. But yeah, this is the side I hang out on these days. So yesterday yesterday my wife and I, we went to Santana Row to help out another friend who's doing like little jewelries. It's called like Capricorn Honey. But they had a little booth, a pop-up shop in Madewell. You guys know Madewell? It's owned by like J. Crew, I think. Yeah. So we did a little pop-up store in there, and I'm just looking at our business like, wow, you're selling each unit for $40, right? Piece of jewelry for $40. Now I probably shouldn't talk about this producer conversation, but for the sake of art, we're already talking. Maybe I just show you guys, yeah, I brought it up, so I have to finish it, right? Capricorn Honey. So I'm not marketing anything, all right? I wish they paid me money to market stuff like this, but no, I'm not. So they did a little pop-up shop in Madewell. I was there because my wife wanted to introduce me to this girl who's like a very business-savvy girl. So this is the booth that we did yesterday. So I was there. I was looking at I was setting all this little tiny jewelry up for them in Madewell and Santana Row. I know, you probably can't imagine me playing around with like little accessories and stuff. But I literally put all that up. Oh, 25% of that up. Yeah. So yeah, they started selling each one. That's my wife, by the way. They started selling each one for like $40 a unit, and I think her margins are like, she's probably buying it for $5 a unit. So she's making like 35 bucks, and that. Now I shouldn't disclose how much, but sales were in thousands. I'll tell you that. It's amazing, right? Yeah, those two little girls bought two, and then the aunt too. So that's like $100 and whatever, right? But that's business, right? This is what you guys come in here to learn. So now going back to this, when they came in and they saw all that, the people saw this. These days I'm over here. I see numbers, not like the Matrix, but I see numbers.
Yeah, I like Matrix.
You like the Matrix? The numbers are just a lot more fun for me, and that's what this club is about. We look at a lot of numbers. So I hope it could evolve your thinking after today, or a little bit, get you places. I don't know, but that's business. Because the better you understand business, sales, marketing, operations, all that, management and stuff, the better your stock investment becomes, right? So I hope you guys don't think that was like, oh, we're digressing like crazy. But if you're me, you would see everything is interconnected really, really tight. So anyways, sorry, we kind of went like away from the macro, conversations just go, but I gotta have fun with this, right? Come on, man, it's like my number 84, let me have fun. Anyways, that's the Shanghai index, guys. Oh, did you guys have any questions about business operations or margins, or how to get a deal at like Madewell and all that?
Actually, how did you go about getting a deal there?
Yeah, so she's been doing it for 6 years, those pop-up shops, and I think she just kind of networked from one network to another. So for me, something like this, I'll give you some real example of like why I love doing this. I met investors, right? And some investors introduced me to other investment companies. And so recently my mixer, I paid like 200 bucks for the food. You saw the, all the prosciutto and the crackers out there. That was out of my own pocket. But after doing that event, one investor noticed, he introduced me to another group of investors, and these investors own like 600 units of commercial property in Texas. And they're like, hey, we want to sponsor your event. So I'm like, cool. Now I got free food for the audience that's coming in for me to build my network. So when you ask, how do you get deals? So I do enterprise sales at GE Digital. I source deals through phone calls, conversations, relationships. Now, if building businesses is about relationships. It's audience, right? Now, after like being a salesperson for like 2-3 years now, it's like you gotta keep outreaching, email, cold call, and introduce yourself over and over. You learn, you start developing philosophies after 2-3 years of cold calling. Now, if you haven't cold called, then you never started a business before. But that's what businesses are about. I mean, one portion of it. But what I learned after 2-3 years of doing that, the huge philosophy is that, dude, I need to be like Warren Buffett or Justin Bieber. Okay, I'm not gonna go sing, but the point is, what if someone called you and they're like, hey, this is Warren Buffett? You drop everything and talk to Warren Buffett. Most likely. So it's you just gotta put yourself on the market to kind of be seen. So that's something I realized, and I think it's very critical to build a network. So my network's grown for the past 1.5 years. I'd love to introduce you guys to my network. If you got a network, if it makes sense, if the economics make sense, let me know. We could go source deals together, whatever. So that's the other portion I like too, sourcing deals. But I'm everything business, investing, and finance. So that's what I enjoy doing. Did that answer your question on like the how to source a deal and all that? Yeah, it's relationships, and just if you do something good constantly, like I'm constantly teaching finance, so I for some reason I attract investors. They keep coming to me. But that's really what it is, and investors are looking for upside, and and I personally want to become a better investor or trader. So this is why it kind of makes sense for me to teach this stuff, even for free. Anyway, so sorry that we digress like crazy, but going back to it, Shanghai experiencing a bear market, and it looks to be getting worse. But that's okay, because if you're sitting on the sidelines still, there's a lot of Chinese stocks that look like opportunity. I know one of our members, Santo, he asked me about IQ. IQ is one of like the, I forgot what they did now, but in the venture capital report that we opened up, it was the 500 startups report. It showed that IQ was one of the leading Chinese players in the, I think, media segment. Let me see what industry they're in. Internet information providers. So this is, I gotta see who funded this, what venture capital funded this.
It's from Baidu, then.
Yes, Baidu owns, interest in that.
It's similar to Netflix in US.
Yeah, you're right. Yeah, so, isn't Netflix in China?
No, he's a licensed Netflix player for.
Yeah. So here's the thing that to keep in mind when we're looking at IQ, right? For all these VC startup models, they don't make money. They have to go through a J curve in the beginning. In the beginning, they just lose money. That's just the nature of it. But they lose money to pursue a market business model and market opportunity that no one else has. So Uber, they're gonna totally fund Uber if Uber collects market share. Right? It's all about market share, which is audience. If you think about it at the end. But look, if you look at this company, it's not well, recently EPS has flipped to the positive side, right? Sales are pretty parabolic, it's aiming up. So when I see stuff like this, I know the market's always pricing a premium to it. But as of right now, looking at the macro, the Shanghai macro, Chinese stocks are a no-go right now. It already broke down at the $30 level. It looks like it might want to break down at the $25 level. So I'd probably let this one sit. And you're probably wondering like, oh, where's all the patterns and stuff? I don't see it, right? Right now we're on the daily. Let me switch over to blue. We're on the daily. I guess you could say this is a pattern here. This is you remember this pattern if I quiz you? Falling wedge, right? Leads to a breakout one day, right? Who knows? It could go this way and then this way and this way and then eventually break out. How does this work? Heck yeah, it works. It works, but it doesn't work for the undisciplined and untrained person. I'll tell you that. To give you an example, let's see if I could find a GoPro chart. This was back when Thinkorswim was like blue. Now they're black. So if you notice, this is Thinkorswim. It's black. I have a chart of GoPro before the update, and they were blue. I don't know if I could find that. Let's see, technical discussions. No. It's in my database. This PC. Sorry, guys. Trying to find all my stuff. I'm kind of messy. Maybe I'll have to circle back to that for you guys, unless I can find it. That's my stomach going off right now. China is a great and rare opportunity with. It is a rare combination of value. Oh wow, I think Baidu's holding a company like ABGO. Okay, China is a great and rare opportunity with. It is a rare combination of value and hyper growth. I agree. The dollar. So Santo, a little digress, but I gotta show you the GoPro chart real quick. I'm also gonna show you the emerging markets. Darn, I don't have it. Okay, I guess I don't have it, but it's like a super old school GoPro chart. It basically shows this. I'll show the chart and then I'll jump over to Santo. So the GoPro one, GPRO, amazing. You see it? The pattern? We're looking at weekly, so it was that amazing pattern that I drew. Right? And then if you want to slap a Fibonacci retracement on it, you go from swing high to swing low, and you can see that it retraced about almost 50%, and then break down again. Pretty interesting, right? Yeah. So I personally like patterns a lot. That's just me. Some people trade on pure indicators, right? Like MACD, histogram, JC, his style. But it's up to you. You pick your style and how you trade. But going back to answering, so I answered your question with the GoPro. Santo asked me, yes, it's a rare opportunity. And I'll show you the reason why we're seeing this huge decline in China. And you'd be pretty surprised. What did I put China? Asher. So we know that Asher is the ETF, the Shanghai ETF. So it's an ETF that tracks the Shanghai index. So we're pulling this up for education's sake or just analysis. And then we go over to, let's see, studies, and then we'll add a study. We're going to overlay another stock on top of this. And this stock, we're going to overlay it with the dollar ETF. And then you're going to see something very amazing. Let me know if you see it. So this is the dollar, and this is the Shanghai index. The index started declining when the dollar value started rising. You see how like the dollar and emerging economies have like an inverse relationship. But at one point they were kind of going the same direction. But this is what it looks like. So if the dollar goes up, that's also a headwind for Bitcoin if you're trading Bitcoin, right? So those diehard blockchain lovers, they're like, no, it's going down, bear market, red territory, whatever, hodl. Yeah, I mean, I think the dollar is one explanation. Now, the dollar is a very important platform. We chat about this in the week. I don't know if you guys understand that concept of platform yet, but the dollar is so important because even if it moves in like 1 cent, think about who's operating on a dollar. Multi-billion, trillion-dollar corporations are operating on a dollar. If the dollar fluctuates, that's like the ultimate leverage. And I mean, you're operating on the dollar and you're leveraging with the dollar, and it's like, dang. so that's why. So as the dollar increases, it's major headwind on the economy. It's economic headwind on the economy.
US economy too?
Yeah. It has to do with import exports. Now that's going into forex, and that's very advanced in my opinion. You have to think at like a higher level than stocks at this point. It'd be the sovereign level, but that's not today's conversation. The most recent headline: U.S.-China plot roadmap for meeting between Trump, Xi, and resolve trade dispute. Wall Street Journal. This was Friday's headline. They're going to meet to talk about the trade war or whatever. So that to me kind of screams like maybe opportunistic trading in Chinese stocks. So even though I say try to avoid it, yeah, it's in downtrend mode, but downtrend means sharp spikes. So opportunities for people who want to just trade that.
This meeting is only low level, so no decision will be made. There are 5 barriers which will never get agreement. So the main talk will start in November, which they will look for that time.
So low level talk, but keep in mind there's a lot of speculators out there. I mean, like I didn't trade like back in, I don't know, like 90s or early 2000s, but I hear people used to observe like what kind of suitcase was the Federal Reserve holding, right? You know what I'm talking about? Like if the suitcase was full or empty or whatever, I forgot. I mean, people will speculate on the craziest things.
The biggest thing too in China is like before that announcement, everybody was like, they weren't even talking to each other, so the market was a little bit panicky. So now that even though they're low level talks, they're talking to each other, so the market's like, oh, at least something can happen, something positive.
Yeah.
In November, they have, like you said, real talk at the upper, the higher level ones, and we'll see depending on how that turns out.
Yeah, but there are some major stocks that, I mean, for educational purposes only, you guys might want to consider. You guys know Tencent, right? Tencent is like literally taking over China's world. Or did they already? Can you tell me? They're like everywhere. They're basically what, the Uber of China too? The PayPal?
They have everything.
Yeah,
Payments,
PayPal.
Like you literally
Yeah.
do anything you want.
Because I have my uncle and auntie, different one. They fly to Shenzhen very often. Okay, now this is weird. I'm Vietnamese. My wife's uncle and auntie. She's Chinese. They fly to Shenzhen and all that, Beijing and all that, pretty often to do like small deals. And they tell me like how they always, every time we have dinner on like Fridays, they're always telling me like, hey, like they're so China's population is so advanced compared to us. Like, I mentioned in here that you got a homeless person asking for money through QR code, but they're saying that like most of the transactions are on the phone, and that's just like that's setting up something like blockchain to maybe come into reality. But sometimes I'm curious to know like why haven't we adopted like that?
I did some research on that because in America and the Western world, we had this credit card phase, and credit card to mobile is not much of a value add. But then for them and like
they skip the credit card.
They skip the credit card, so cash to mobile is a huge jump.
Yeah, so we talked about this extensively in like the previous technical discussions. I totally addressed like what the hell, they totally went from cash and skipped the credit card or whatever and jumped to mobile payments. That's the power of like technology. You know, and if you guys come in here long enough, for people who are online who come in here all the time, they know like I'm a big fan of like software stocks, because I mean productivity stocks, right? Like Microsoft and stuff, but they're basically. So I utilize enterprise software to operate like an army, but I'm just one individual. That's the power of technology, but a lot of people don't know how to use it. So that's why I like it, right? Like, why do I need to go hire workers when software could automate all this? I mean, pros and cons, right? I get further, but you know, my operations would be a lot leaner. So that's why I noticed when meeting some, like, let's say I did meet this year. I met another financial advisor. He runs his own firm. It's called Prashalam Investments. He's Chinese. I don't know if you heard of him. He's pretty big in Fremont, maybe. But I sat down with a conversation, you know, SMB conversation, small to medium-sized business discussion with a business owner. Because he wanted to bring me in, but I said, hey, I'm not really looking to jump back into the finance world, because I love teaching, and if I do, then I can't teach anymore, because they restrict your mouth. Okay, they restrict you from saying anything. But we were just talking now, I was talking about his business infrastructure. What are you using? And then he's using like Excel sheets, but he's looking into a CRM like Salesforce. And like, it's just like, dude, you could totally scale your business a lot bigger if you just implement something like a CRM. And then like, how are you sending your emails? Oh, like he's, you know, sending it through like, well, I guess I forgot, but like Gmail, like one-off emails. You heard of an email blast? I'm sorry, but this is, you know, business consulting for like an SMB, right? If only more SMBs knew. But we're also seeing this transformation with companies like Alibaba. You heard of the whole old retail, new retail, or I'd like to call it, you know, legacy retail and next gen retail. Legacy retail is like you going to like a mom and pop burrito restaurant here, right, where there's no technology. But next gen restaurants would be like, oh, you come in there and it'd be like a Amazon Go, right? You come in, you pick something up, you walk out, you just got to charge. That's more futuristic. You didn't just get charged, let's say. They collected your data, they collected your contact information to upsell you later. Man, that's, I don't know. So funny story, yesterday, you look at Santana Row, right? There's a 2-hour parking. And like the way technology is advanced, I'm just like, we forgot we parked in a 2-hour parking spot in Santana Row. And we came back, there was no ticket. But I'm like, damn it, there's a camera. You know, the camera's just like, you know, recording the spot. So they know I've been there longer than 2 hours. So you know, thinking about technology, like, you know, like technology is so awesome, but at the same time, it's like, dude, I probably got a ticket now. Yeah, it's a interesting world, I have to say. But Tencent, they really disrupted the lifestyle of Chinese people, in my opinion. So
I think they're getting maybe this is in the short term.
Yeah.
I just read recently they're tanking currently because they are having a major crackdown by the government because of some content and gaming and things like that. And I heard gaming is a big source of revenue.
So I didn't jump specifically into Tencent, but the whole index is dropping. That means all stocks are going down. So yeah. So I mean, to me, I view it as like, oh, everyone's selling.
Because of, I think, regulation's one big thing.
Yeah. So speaking of the moving along here, speaking of the Indian economy, right, and you know how it kind of looks like opportunity. Now we just applied macroeconomic view, meaning we see that, you know, there's major opportunity in India because of the young, unleveraged population that are hungry to go purchase IKEA. Man, did you guys see the IKEA line? Or one of our members, SK, he posted IKEA. Oh, I just sent IKEA to everyone. Yeah, this is what he did. So IKEA opened for the first time in India, and he took pictures of it. And this was like one of the lines or whatever to IKEA in India. So I mean, these pictures are awesome to me because from an economics perspective, it's like people really, there's a middle class there. I'm assuming middle class or whatever. They really want to consume something. They really want to spend. So, you know, I'm on LinkedIn. I'm pretty active on LinkedIn. Okay, and every day I get at least one Indian person from India adding me, and it's like some like entrepreneur, blockchain entrepreneur, or software, or SEO, web development Indian person. So I see it. I see. You know, I might one day start a trading community online, and it'd be like an Indian audience for some reason, just because they want to consume. So, for you guys, this is opportunity right here, in my opinion. Just figure out how to monetize that, right? You know the secular trend, the big macro trend. Go find micro opportunity somehow. If you can't, then you can always invest with like stocks or ETFs. But yeah, it's amazing, right? One more picture that he showed, like just people like this. This reminds me of the Black Friday days back when things weren't as regulated as they are now. Now you come in, they already know what you're gonna do. Like, I remember when I was young, going to Black Friday, you have to wait in line, right? But now, like, it's like 24/7, like open like on Thanksgiving Day. So you don't get that consumer hype anymore. But I think that's really what people enjoyed. Anyways, moving along. So this is the India ETF. So we look at the trend right here. Since February, the dollar started rallying, so it caused the emerging economy INDA India ETF to start to have some headwind. But we have a rounding bottom right here, and this is on the weekly. So if I see a rounding bottom, I'm seeing buying pressure. It's kind of holding up. So it's holding up in a dollar environment that's going up, but China's not holding up. So you see how I kind of find the value in like a counter move, divergence, convergence. Yeah. I showed you guys this already, but it was basically the picture that we looked at between the EEM. You're wondering like why did it drop, and the purple line is the dollar ETF. So the dollar rises. That's very important. Now, take a moment to pause. Let me ask you this question. Are we a trading community or investing community or like, I don't know, like economic community? Like what's your take on it so far? We kind of talk about everything, right?
Yeah.
Pretty broad, so I don't know myself how to exactly define it, but I hope these techniques or this type of thinking will help you in like investing, trading, anything, even businesses, right? Opportunistic business creation or whatever.
How can I add you to my LinkedIn?
Oh, you want to add me on LinkedIn?
Yeah, how do you do that?
Well, we could do it off the clock because I got like 40 minutes left. We'll talk after. Yeah. So I'm a big fan of LinkedIn. I think we talked about this already. I probably talked too much about it, but here, Microsoft acquired LinkedIn for $26 billion, and I'm looking at Facebook at what was previously 500 billion, before it dropped to 120 billion. And in one of the previous discussions, we talked about how people spend their time. Let me see if I could find that. Someone did this awesome statistic on how people spend, the average person spends their time. Statistic, time spent in America. And it shows you like a flow chart, a bunch of dots moving around of people spending their time in terms of leisure, cleaning their homes, work, sleep. And after looking at it, we start seeing a pattern that most people spend their time sleeping, leisure, and work, something like that. It was an American Times survey, but it was put into a very nice chart. Let me see if I can find it for you guys. We are sort of revisiting some old conversations. I hope the people online who are the people who always come are okay with it. Anyways, so this is the flow chart right here. Right here. You guys see this? We looked at this previously, but I just thought it was super interesting to bring it back up. Right now it's 4 a.m. in the USA. So I don't know if it's clear for you guys, but you see that majority of people are sleeping at 4 a.m. And if I start speeding this up to medium, right? 4 a.m., 4 a.m. What do you think is the next thing that's going to happen? They're going to go to work, right? So let's speed up a little bit more. Or we'll speed up a little bit more. So people start to wake up, and you see people going to work. Some people will leisure. I guess you're retired or you're just rich. But then you got housework. But it really shows how people spend their time. And around 6 a.m., going to 7 a.m., you see more workers, right? So this is super fascinating to me because, well, where do people hang out? If it's leisure is a big category. I'm thinking Facebook. If they're at work, I'm thinking LinkedIn. So you could start a business and sell people while they're at work. Knowing that the best hours to interact on LinkedIn is from 9 to 5. If you think critically about it, that's so 9 a.m. most people are at work. Most people doing housework, some household care, leisure, right? And then around 10 a.m. people go to lunch. Is there lunch? Food? Oh, they're still at work. Okay, but let's just make it fast, and then I'll do like one day just to show you guys like how things kind of move. So the thing to keep in mind here is that I know the data is like everywhere, right? But what I'm really just focusing on is where the huge collection of groups are. So just visually, I see a huge collection at work, and a huge collection at leisure, and a minor collection at household care, or housework. So in this life that we, the average Joe lives, housework is part of it. So I thought, the way I think about it is I never want to do housework. So if I were to buy a home, it'd be like, a little tiny home or something like that. Because I don't want to spend my life doing housework. Just by this analysis. And this is my own individual thinking, so no offense to anyone. It's just what I think from seeing the data. So around 5 p.m., you see everyone's collecting at the leisure. So what makes sense at 5 p.m.? You ever go to like Chinese restaurants and they're open like you want to eat at like, you want to eat dim sum, not dim sum, but there's some Shanghai restaurants I went to that sells the dumplings, but they're like, oh, we're closed from like 2 to 5. that awkward hour, but I'm hungry at 3, man. So it's interesting. So this explains a lot how leisure is around like 5 p.m. and beyond, right? So in terms of starting a business and how you want to sell, maybe you might want to sell on LinkedIn from 9 to 5, and then after 5 you might want to sell your cafe, right? And then at night when people are sleeping, you might want to just sell on the internet, trying to make money 24/7 somehow. But yeah, by 12 a.m. everyone's sleeping. So this is for your guys' interest. If you guys want to look it up, just look up flowingdata.com. This is 2015 data, by the way, guys. I would love to see a new data set where it includes mobile phones. That'd be super awesome, but not in there.
How do you collect this data?
So this is data. I think they go around surveying how people, to everyone, just let them know that my computer awkwardly froze. Man, that's crazy. That's like, oh, okay, all right, we're back. No, we're good. We're sorry about that, guys. My apologies. I don't know what happened. Maybe I just have too many tabs open. It's funny because when I, a little digress, when I'm looking at laptops, I want the power, but at the same time, I don't want the lack of battery life. So you're trying to squeeze that optimal point. That's just being geeky with economics. But what were we talking about before it kind of froze up? Kind of lost my train of thought. Oh, right. I was going to show you another interesting one, which is the demographics dot map. We looked at this many sessions ago, but I guess sometimes it's a nice refresh to bring it back up and just to share once again. But this is sort of what's going on in the world right now. I'm sorry, not going on in the world. This is what the U.S. looks like, and this is pretty outdated information. It's probably 2010, so 8 years old, right? But you're looking at the map and you kind of know white, Caucasian is blue, black is green, Asian is red, and so forth, right? So this is what it looks like. I mean, I personally geek out to this because I didn't know the majority of the 350 million are on the right side, of the country. I don't know why, but it's so sparse over here, right? So you can use this for many reasons. Like, I don't know, you might want to go look for a very dense area to go vacation in, something like this. Is that like Chicago? No, Chicago's over here. This is, I don't know, I forgot. But let's look at Silicon Valley real quick. This is where we live, right? Yeah, so Silicon Valley is pretty diverse. Some days when we get bored of talking about the stock market, we talk about, economics and stuff. It's just a nice, change in topic instead of talking about money all day. But any comments on this? Like, did you guys find this interesting?
They don't miss Indians.
You've seen this before?
They miss Indians.
They what?
They miss Indians.
Oh, well, I think it's categorized as I think it's it's super interesting. I didn't know, look at San Francisco, right? It's pretty diverse. But anyways, you guys could look that up on your own time. We kind of digress a lot, so just to answer the question. So I'll skip this one just for time's sake. Looking at the S&P 500, what happened this week in the stock market? Man, it's been choppy. JC, it's been super choppy, dude. There were moments this week on Wednesday or Thursday where I thought okay, looks like more downside, and then things just went back up. At this point, it looks like things want to go up. So that's kind of what I'm seeing on the daily. I don't know if your momentum, on your weekly change or anything.
No, it still looks good.
Still looks good. So it's still looking down. Oh, so it looks bullish now. Last week, okay, because last week we were kind of bearish.
Pull it up, I think, on the weekly.
Yeah, this week it was kind of. So we're looking at the S&P 500, guys. Is basically what happened to the U.S. markets. That's all it is. Let's do advanced, interactive, weekly. So this is what happened in the U.S. market. So momentum looks like it's sustaining. Right, looking at your histogram. To me, from a pattern perspective, or what the chart looks like, I'm more of a daily. It looks good. It got really scary this day right here. But if you want to apply your daily, your doji right here, you got a doji. And you got that reversal move, short-term reversal move. But are you a short-term trader or mid-term, whatever, right? Let me know how that movie goes.
Oh yeah.
Yeah.
Friday I went, I can't get tickets. So
Wow.
6:30,
Okay.
7:30, 8:30, 9:30, all full. All ticket only left is 10:30.
Wow.
So I have to come again.
Yes, K Web. Okay, so Seth's about a question. K, would you do individual stocks or K Web to dollar cost average into China? Wait, would you do individual stocks or K Web to okay, so you're okay, I see what you mean. You want to pick up this opportunity in Chinese stocks. That's what you're asking for. Just be careful, SK. It's K Web. So a great example, I guess, to kind of help you is when you order food, the food's still hot. Wait for the food to cool down. So the food's still hot right now for China. That's my opinion. I mean, you could try and pick a bottom, a sharp V bottom, but I think it's short-term trading only for China right now. I want to see a base, a robust base, and then sort of a reversal. We haven't seen. I thought we saw a base in cryptocurrencies, but this is what Bitcoin looks like. I guess you could say we kind of have a base at 6,000 right here, right? This is Bitcoin against the dollar, 6,000, right? Since December till now, we sort of have a base. But not in Ethereum. Ethereum broke down, and it just broke down 400 and started falling down. Hey, what's up, SK? Are we going for lunch? It looks like you're gonna take me to lunch. No, just kidding. Let's see. So that's my take on the Chinese stock. Let's move into, because we got about 30 minutes left. Let's look at the indices. So we looked at S&P 500. It looks like it's going for a breakout. Again, no comment. This week was super volatile. Do you think the ETH is still going down? At this moment in time, yes. I think ETH looks like it's gonna. Oh, this is not the ETH we're talking about. We had a question asking if Ethereum is going to go down. Yes, I think so, because it's not really holding 300, and it's kind of setting up a bear flag. If you kind of see it, I don't know if you can see it. A little tiny bear flag right there. Yeah. I think further downside, but Bitcoin surprisingly is holding 6,000. So I'll continue to monitor 6,000. The last thing I want to see in this specific cryptocurrency space is Bitcoin going below 6,000, because it's like all the guys who accumulated at 6,000 is like, oh no, it's below 6,000. They're like, all right guys, time to liquidate. So I'd say just watch that price level. Importance of a price level always changes over time. but that's what I currently see in this chart right here. So, picking a bottom is a very exciting activity. I'll tell you that. So let's go back to it. So as Santo, that was my take on Chinese stocks. Let it cool, let the food cool, and then try. But you definitely could try some trading. Just, I mean, when it's dropping so much like that, it really makes you feel like, oh, I want to be greedy, but try to protect your principal. It's my take on it. QQQ, this is what I'm seeing. It looks okay. Nothing doesn't look bad. I mean, S&P 500 looked worse this week, but QQQ looks a lot better. You're welcome, Santo. Dow Jones, this one looks a lot better with the Walmart earnings and gap up. I think this one has some upside to come. Looks like we're going to break out and go higher here for Dow Jones. So market conditions, US-wise, is looking really good. Or looking better, I'm sorry, I shouldn't say really good. Middle market companies, mid-cap companies, looks like it's consolidating higher. It looks like it wants to go higher to me. So mid-cap stocks. IWM, my 401k, I put a lot of the chunk into small caps. It looks okay to me. Doesn't look bad. So that's what I'm seeing in the U.S. markets. Moving on to some of the stocks out there, because I'm afraid we might not have time talking about the semiconductors. That today's VIOG, is that a semiconductor stock? Semiconductors experiencing, okay, so my take on the semiconductor space, because I had some questions on like NVIDIA, Applied Materials, or Micron, small cap growth. So that's another one, AVGO for small cap. VIOG, sorry. Yeah, I mean, so regardless, Santo, this would probably mimic the IWM, Russell 2000, which covers the small cap index. But semiconductors, let's pull this up. So I'm trying to play Intel, but it doesn't look like the trade's going my way. I know people are looking at NVIDIA, how I feel about it. Let's start with the bigger picture of this specific sector, right? Or not sector, it's technology, but the subcategory is industry. It's semiconductors. So I like to look at a semiconductor ETF called SMH. So this is SMH, and immediately I'm seeing that it's broken below the 200-day moving average, and it broke several times in the past, since in May, in July, and so it's signaling warning to me, because it's like it tried so hard to hold the 200 MA, now it looks like it might fail the 200 MA. So to me, it's I think I'm not an expert on semiconductor cycles. Maybe you could tell me, SK. I don't know. Any comment on that? But I mean, looking at the earnings, right? Like Intel, they're doing good. Nvidia, their earnings are okay. Slight decline for the quarter, but
that's because the cryptocurrency craze is kind of like that's a little bit settled. Otherwise, they're doing fine. So they're like a little bit firm. AMD and Nvidia got these last 2 quarters because of the cryptocurrency mining craze. Kind of slowed down because things should be expected.
now, I mean, we look at Intel, they don't make all their money from the cryptocurrency
Not
play.
Intel, Nvidia.
Nvidia. Now,
The GPUs are just made by Nvidia and AMD.
now we do have Nvidia's revenue model in here. Let me just skip ahead a little bit.
How's AMD doing?
It's gapping down. But it gapped down, it looks bad, but it's still holding 100 MA, and it's still holding a major trend line. So this is NVIDIA since you guys asked. You see how I drew this line with a star? It takes 2 points to make a trend line. So we got one, well, you could say this is 2, but I would call that 1 point, and your second point, and your third point, and your fourth point. So we have 4 attempts at this line. Someone or some collective group keeps buying at the trend line.
I believe in their core business, they're still doing well. In their core business.
Yeah. So let's look at the core business, right? So the trend line is kind of broken, but let's see if we get a retrace on Monday, right? So maybe quick trades for those quick traders for NVIDIA, but let's look at the revenue model. This is purely how they make their money in sales. They make the majority of their money in gaming, okay? And you see how I drew these lines? The lines represent basically looking from here to here. So it's you could look at each number and start adding up like, 1, 2, 3, but the line is the quicker way to look at it. So it's kind of like technical analysis on fundamental analysis. But anyways, so sales went up for gaming, and then did slight decline, and then back up, breakout higher, right? And they also make, so they make the most of their money from gaming. So I'm guessing graphics cards. I didn't read the exact, I should know by now because we talk about NVIDIA quite a bit. But this is the bulk of their money right here. The next bulk is actually the data center play. And I think this data center play is going to keep growing because that's a macro trend. But it's not the bulk of their earnings yet. It's a portion, it's a big portion, but not there yet. Next one is professional visualization. I think that'd be like commercial graphics. Would anyone agree with that? Or so I mean that's a portion right there. So this could be like retail graphics. Over here is commercial graphics. When I say commercial graphics, I'm talking about like those huge screens in New York, Times Square, right? Featuring like the NASDAQ ticker symbols that, you go to New York and you're like, whoa, like all these screens. They supply, they're part of that. They probably didn't make the screen, but they did the GPU behind it. So that's what I'm thinking there. I didn't read the exact specifics because I'm just a numbers guy. I jump into a stock, I just look at the numbers. Is it making money? If it's not, what's the chart? What's the chart reacting to? Then I kind of just get my idea from there. They're also in auto, but auto's not grown yet. You see how it went up a little bit and then it just went sideways for auto? That's autonomous driving, and we know that's a big appetite of these major corporations. Though the money's not there yet because sales aren't really in existence yet. So this is how we could, kind of gauge the real time of like autonomous vehicles or autonomous driving, right? You might want to be an entrepreneur in that, and you might want to jump in when it starts, ramping up, but there's no ramp yet. So maybe you can jump in now, start developing some, AI, autonomous vehicle, artificial intelligence. But yeah, and then the last part is their OEM and IP segment, which is the lowest, and that one's kind of like choppy, up and down, up and down. So it looks like a cyclical type of revenue on this one. So that's my view on NVIDIA. Now, a little closer examination on NVIDIA from a CFO level. Let's look at the numbers, right? What really happened for the quarter? Quarter over quarter went down in terms of revenue, in terms of sales. So that means ultimately net income went down about 11%. But if you do year over year, right, meaning Q1 2018 and then Q1 2017, it's up 40%. So it depends on how you look at it. Annual-wise, and from an investor, a long-term investor point of view, they're doing pretty good. But from a quarter-to-quarter swing trader, darn, like missed 11%.
Why does it say 2019?
Yeah. So the way they no, yeah, it's for the year of 2019.
It's fiscal year. Many of them will start this year and then move on to next year.
Oh, actually, you're right. Sorry, you're right. Fiscal year
Most
almost.
of them don't go Jan to December. Like Apple does October to September, from
Yeah,
now.
yeah.
Q1 will be from
But
there.
it says 2019.
Yeah, because it's fiscal year next. So the ending
It's
year.
it's just the time frame they're playing in.
Yeah.
I thought this generally reported a quarter which went by.
No, not everyone's the same. See, that's the other thing too. Not every company has the same amount of shares outstanding. Not every company has the same quarterly reports.
But would it be then comparable to somebody who's reporting a quarter that went by?
I would say yeah. I mean, time, like you could kind of, it's all, like if you were to draw out another corporation like Intel, right? Like it'd be like, okay, if the quarter earnings are like, there's 4, right? It might be slightly off like this, you know what I mean? Like they might be ahead or behind a little bit. Let me know that drawing made sense. Like you got one earnings over here, and then one earnings over here. Okay, but that's NVIDIA. I mean, chart-wise, if I were to look at the chart on NVIDIA, it looks scary. And every gap down, the direction kind of continues, and the volume is pretty high on the gap down. I think this one might move to the 200-day moving average, along with all the other semiconductors, right? Because if we look at SMH, the ETF of the semiconductors, it's already at the 200-day moving average. So you look at Intel, right? It's already at the 200-day moving average and kind of moving lower. SMH, again, the ETF, see that? Below the 200-day moving average. So I think there's a good chance NVIDIA might decline to the 200-day moving average, just from the most recent price action.
What about AMD?
AMD? So AMD is it looks like it's experiencing some other type of news. Right? Some like, this one, the chart clearly looks bullish. But I'm not playing AMD. I mean, you guys can. Financial wise, it looks like this is moving more in terms of, I mean, they haven't been profitable for like so many years, right? And you're like a very, you're an old company. I mean, how long is AMD?
Usually 30 years.
30 at least.
30 years, right? Well, it's 30 years. We got 30 years of data. Let's check that out real quick. AMD.
I know they were huge in the dot-com bubble era, like before the bubble.
Let's look at their earnings, not their sales, all right? Let's go down to earnings. Let's do the EPS. 30 years of earnings. No way. You can't be profitable for like unprofitable for 30 years. That
Well,
means
it's on paper. In reality, it's different, right? It's just for tax report.
Well, now I want to look at the balance sheet after seeing this. So this is the EPS. So positive. Okay, so this is from 1990, all right, guys, all the way till now. So in like 2008, they were really unprofitable, but they weren't widely profitable. Let's look at their balance sheet. Like, what was your net equity look like then? Total equity. You weren't profitable, so they started off with about 644 million, and then at some peak they were at 6 billion. What's the market cap of AMD?
Close to 40 billion. Not sure of that.
20 billion.
No, I don't think so. Actually.
20 billion, and you're trading at currently 20 times. Okay, that makes sense. Guru. Yeah, so their balance sheet's all right. It's just, I mean, let's look at the bigger picture of AMD and see how well the stock performed. Right? It looks like they weren't really making money for like a very long time. So if you look at holistically, I guess this area makes sense because they haven't been making money. Oh, that doesn't sound promising now that I did a deeper dive into AMD, but as of recent, it looks promising.
Did Amazon ever make money?
We can look at it.
It didn't
But Amazon on purpose did not invest, become profitable.
Yeah, so
Reality is they never actually put, I don't remember if they put any profitable quarter.
But they wanted to keep growing. On purpose did not become profitable.
Yeah.
I mean, EMB wasn't like I was planning like that.
But 2015 was the first time they hit profit because of AWS, and since then it's been going up.
funny. Yesterday I was reading the investor newsletter, a report from Jeff Bezos himself. He writes a really good memo to his investors. You guys should read it. It's super interesting. I think I have it right here. Yeah, I was reading this yesterday. So this is the Amazon 2-hour share owners. You don't have to read like all 89 pages. Just read like the first 7 pages. It's amazing because he talks about, now we're kind of digressing from AMD or Amazon financials, but he talks about like the most recent wins, right? And where he's seeing opportunity. This is like, can you read 6 pages to learn about the world? Like from a person who is like 150 billion in net worth?
Then he started in finance anyway.
Huh?
He started in finance.
Yeah, he worked at a hedge fund. The hedge fund's actually, there's one located here, same one. I forgot the name of it. It's actually, yeah, yeah. So was it D.E. Shaw?
I think he worked at D.E. Shaw.
So there's a D.E. Shaw right here on El Camino.
Is it?
Yeah. You know where the Happy Lemon milk tea? Okay, you don't drink milk tea. You know the there's like an interesting circular infinite art piece of art in the corner of near Apple in the water fountain area in the hotel. What hotel is that? Can you please post a link to the document in chat? Yes, I'll do that later, Sylvia. It's literally down the street at the corner where Starbucks Reserve is. Tell me you guys know that. No? Fine. Whole Foods. You know there's a Whole Foods down here. Target? So where are you guys driving from? Okay. Okay. Well, anyways, there's a D.E. Shaw or the hedge fund that he used to work at here.
What is this document again?
This is the investor relations. If you want, I could send you this document as well. So it's just 6 pages, but he goes into depth of we're making money from Prime, from AWS, from Whole Foods. What we're trying to do. Their main goal is to be, okay, in his words, in their corporate words, is to be the ultimate Earth's ultimate customer-centric company. All right? And when I look at like what he's doing, I'm like, well, Earth's only like consumer provider or company or whatever. Like he's tackling everything consumer related. He's not doing anything B2B. But he is funding, like he's investing in some companies like Workday, which I like as well. But yeah, it's just 6 pages. I would highly recommend to read because it opens your mind. Like, dude, if this guy's worth 150 billion in net worth, can I print some of these pages and sell it to people for $100 and say this from a billionaire? That I got for free on the internet? You know, since there's 70% of the population who might believe so, might buy it. That's just.
Just question, if Amazon is not making money, why the stock has grown 60%?
Yeah, so now in the stock market, you're going to see companies that make sales. So it's making sales, but after expenses, it's not profitable. So it is making money in terms of sales. So that's one reason why companies kind of the premiums priced into the charts. We see that a lot in the stocks. It happens to like almost every company. Like example would be like MongoDB, MDB. It's like 3 billion market cap. Not even profitable yet, but look at the stock.
Like Tesla.
Yeah, Tesla too.
Yeah, basically you go after operational cash flow.
Yeah.
You see if it's positive, so it's.
Yeah, so I love the stocks like Microsoft because the money's there, it's proven, and it's a great company. So that to me is what I would call a value stock, but not by investor definition. A value stock is something that's trading very close to its true value, intrinsic value. That'd be more like an AT&T right now. But I'm not a big fan of value stocks though, because it's not in favor right now, because everything's just going up so much. Right now, value stocks will probably make a comeback in like a recession. Because it's like, oh shoot, everything's going down, where should we jump to? Hey, that's about close to the value, let's jump to that. It's kind of what I'm seeing. But yeah, I mean, stocks, I mean, the biggest place where you see all these unprofitable companies that keep going up in value is the startup ecosystem. Hands down. That's where all the crazy money is being, the deals going left and right. So another reason why I want to start the Mixer is because we're here in Silicon Valley. And when I hosted the Mixer event, we had a lot of CEOs come in here. And some of the CEOs were, I have to say the companies weren't promising, but I met one that was actually like, oh, that's pretty cool. Now, I'm not a VC or anything, but I like to learn and maybe pass that deal to someone else and get a referral fee. So going back to the deals, yeah, there's many ways to do it, but come up with what you're interested in. Sorry?
So Amazon stock so high, how psychologically
Sustainable?
to buy it at this moment,
That's the hardest question. You're trying to buy something that's like super overstretched. Can you please post a link to the document in chat? Quarter-over-quarter cyclical variance is normal. Yes, I agree. Sorry, Santo. For the people online, sorry if I kind of ignored you guys. It's just I didn't see the messages popping up. To answer your questions, like you asked, like how to position into Amazon. That's hard, man. I can't answer that because each person has their own risk tolerance. It's just. I'd probably stay away from answering that question. It's difficult because it's kind of overstretched, but you just gotta, I say keep learning, figuring out how you want to place a position into it. But let's look at the financials because I think there was interest around that on Amazon. Revenue. So we got about 8 minutes left. I don't want to try and hold everyone more than 2 hours. Just because you guys might get sick of me talking or whatever, like, oh, this is too much of a headache. But revenue, we want to look at profit, right? So net income. We want to do net income, and let's do the balance sheet as well. See if there's balance sheet growth. So total, let's do total equity. We don't want to do total assets. So here's a chart of their net income. So zeros right here. So let's see how far do we have back. All the way back to 1998. They went IPO in 1995. So there's 3 years of data that Guru Focus is not, giving to me that I'm paying for. Just kidding. So yeah, unprofitable. And then right here, in 2004, they were profitable all the way until this year, which is about 2012, end of 2013, right? And then over here, right? And then you said 2015 they became profitable, right? 2015 right there. So they became profitable and even more profitable. So just recently, Amazon became very profitable in the many years. Isn't that interesting? Shoot, I just geeked out to that really hard. like just to see that, like they you know keep trying. It's like, keep trying. You'll see the patterns. Just gotta keep trying. Maybe one day I'll see the money if I keep trying.
They on purpose didn't wanted to show profitable because that brings a lot of pressure from the investors.
Now
They
what?
wanted to keep growing and like invest and grow and grow.
Now what I'm wondering over here, SK, is that you know even though they're
And that was the defined strategy by Buka and Exposé.
like
Like AMD.
like even though now can anyone explain why did their equity grow but their earnings didn't grow?
Just future growth, right? Forward
So
future
all
growth.
this so all the earnings were negative for so many years, right? That means they spent it on something, on assets.
More reinvesting in
Yeah, so this is probably all like assets. So they are growing, but they just keep hiding their money and making them look negative in terms of earnings, but they hide the money into real assets. So they are growing. Isn't that fascinating? Man, that's a lot of finance for today. Okay, we got about 5 minutes left. I think we went over a lot today, guys. I don't want to keep you guys too long. It's a nice Sunday, and I actually want to go do some more reading on some stuff that I just got caught up in yesterday. So, you guys have any questions, like, you know, or any comments? How you feel about this meetup? This is really what we do. Just, it's great. Hey, thanks a lot, man. That warms my heart. Yeah, if you have any questions, let me know. But that's the session for today.
Do you see a sector rotation happening now?
The sector rotation. I mean, anyone can.
Maybe healthcare or
I think the big giants like Amazon and stuff, they're looking at healthcare now. Like
no, I'm saying like in terms of investing in
yeah, and so if these guys are looking at it too, so are the money managers. They're gonna switch eventually. But yeah, I think money's moving around. But right now I'm more mainly focused on the index. I'm not looking at sector to sector because I really just play a few sectors like tech mostly.
but there's a lot of selling happening.
Yeah. Maybe like semiconductor selling, but not like like Workday's not selling. So stuff like that. Any thoughts on NWL? NWL. Let's take a look at that real quick. Oh man, why do you want to play these stocks, dude? 10 billion. New old brand. Margins about 18%, but in reality it's 6% because they probably made some investments and got a return on that that one big day. Multiple balance sheet. Okay, so it's at book value. So that's why I see you like it. Yeah, it's at book value. My concern on this would be like, oh my God, 49,000 employees.
Is it bottom picking?
So Santo, it is bottom picking. What SK just mentioned, like it looks like cheap because you could see that it went down so much, more than 50%. But it's just this is more for like the advanced person, like the advanced trader. Like I think AT&T looks better because yeah, it's like down. Like it's not as a sharp downtrend as the other one, and I see a lot of support over here. So I'm anticipating some support over here, and I see it on the daily as well, right? So some breakout action right here, V bottom. This one I like a lot more because the dividend's higher, and I looked at their revenue model. Their revenue model is pretty robust. So I wanted to attempt a try here. So I bought some shares, I think at 33 or 32.50, somewhere there. So that's I like this one more than the other one that you mentioned. NWL. Let me see what they do again. House New Old Brands. You guys know what they are? Consumer goods, houseware, accessories. Who are their competitors? Let's check out their competitors real quick. So this is the segment that they're in. So their competitors would be like the Clorox company. Oh, okay. I see. Houseware stuff. I'm just trying to get a feel of the business, right? Because when I get someone throws me like a random ticker I don't know about, I gotta kind of feel out what they do, what's their business, and that's ultimately how you learn, because you honestly put in the effort to learn about what does this business do, and you're like, wow, like I learned something about the world. So, yeah, I probably have to do more research on this one, Santo, but it looks, I'd avoid it. I mean, you're trying to pick up, you're trying to do a bottom picking. Doesn't look too good in my opinion. Personally, I would avoid it, but if you're going to do shares, protect your principal. That's my best advice, because it's in such a crazy downtrend. But that's my comment on that. You guys good?
Yep.
Was it fun, or let's call it a day? I'm pretty talked out. Yeah. But if you guys have any questions, you can stick around. But that's pretty much it. People online, I'm gonna call this one a day because I gotta prepare for next week. We got a mixer event, so if you guys want to come out, just chit chat, meet other CEOs or investors or business owners, feel free to come by. We'll put some food out on the table, and you guys can meet my sponsors too. Yeah, it'll be fun. Oh yeah, you have my phone number. I can get you my phone number, or it's on Telegram. Are you on Telegram?
No.
Yeah, so you might have to get on Telegram. What's your name again?
Q.
Q? Nice to meet you, I'm Kay. I know, I was talking for like 2 hours, but I didn't even introduce myself. So what we could do is, I could give you a business card, you could text me, and I'll put you into the group chat. That works.
I don't have your number either.
You don't have my number either?
Oh, you publish them somewhere, right?
Yeah, I mean, it's funny, like, you put out these marketing materials for people to find you,
I
but...
think it's on the Meetup.
669
yeah.
669 221
Yeah.
888.
It's on the Meetup.
Okay. So what do we do?
Just text me and tell me that you want to join the group chat so I can remember.
Doesn't matter, email is also fine.
Yeah, it's like you open up 2 cases and there's like nothing.
They started in like 2000 something.
Before that was
So I'm Varun.
Oh, say again? Varun? Hey, nice to meet you.
Yeah, and thank you. This
Hey, welcome.
I enjoyed it a lot.
I try to make it fun, after like so many sessions.
For sure, yeah. It's just like, a variety of things. So
Yeah,
thank you, appreciate it.
Hey, welcome, man. Hey, guys online, I'm gonna turn it off. So thanks for coming. Sylvia, send me a message so I could send you the stuff. We'll talk. We'll catch up. Yeah, it's out the door too, right? Yeah. Hey, thanks for coming again.
Doesn't